We're going to talk about a foreclosure spike of 117% and why this is the foreclosure problem that I've been warning about. We will talk about PCE, what happened on Friday. I will give you a meaningful quote from Dave Ramsey that I think we all need to hear. That and much more, aka stagflation, is becoming a real topic. So folks, let's jump into the daily financial news. This is for Sunday, I almost said February, April 28th. Let's talk about the bank failure. Let's put it in context and let's talk about what is coming. The first bank failure of 2024 is Republic First Bank. Republic First Bank, it went out, it had $6 billion in assets when it was taken over by the FDIC. What does this all mean? Well, first, let's put it in context. We all likely remember Silicon Valley Bank going out of business and what a disaster that was. Silicon Valley Bank was $209 billion. $209 billion. First Bank, or Republic First Bank was $6 billion. So it was 3% the size of Silicon Valley Bank. Another thing, we are going to see smaller banks fail. We just are. It just is a part of the process. One of the things that we will likely see is little drips of small bank failures. And 6 billion may seem like a big number, and it is. But when you put in context Silicon Valley Bank at 209, it is really not. Why are these banks going to fail? Frankly, it's their balance sheets. A lot of these institutions of the small size have balance sheets that are over-indexed on a specific sector. Now, Silicon Valley Bank was obviously tech. A Republic First Bank might be commercial, it might be something. Some of these folks are over-indexed on office. And if you are in an office market that has seen 60, 70, 80% haircuts, and in some cases 90%, your balance sheet is in tatters and you will go bust. So what does this all mean? First off, let me just tell you, if you are at a smaller bank and you are fortunate enough to have $250,000 or more in an account, please de-risk that. FDIC, all good. If you are like most Americans and you have 10,000, 20,000, shoot, 100,000, I wouldn't be too concerned. FDIC has never not paid up. And again, Republic First Bank closed Friday after business. It will be open Monday. It's just how it works. They're pretty good at it. So again, yes, folks, another bank failure on the small size. We will undoubtedly have more. Do yourself some due diligence. If you're at some of these and you have some coin, be careful. Let's talk about the foreclosure crisis that I have been warning about and is now actually occurring. Folks, if you're not following Resi Club from Lance Lambert, I don't know what you're doing. Lance Lambert, Resi Club, puts out free articles. This is one of them. The commercial real estate foreclosures. Commercial real estate foreclosures. Up 117%. 117%. These foreclosures are reasons small banks will fail. It's just how it works. California, shout out California. California had 30% of the commercial foreclosures. Now, if you want to get away from percentages and go to absolute numbers, first and foremost, congratulations. You're thinking right. Good job. Here they are. Last year, we had 288 foreclosures. Commercial foreclosures. We are now up to 625. 625. That is the highest number for the month since March of 2015. That should make you pay attention, right? That's nearly 9 or 10 years ago. So again, 625 foreclosures in the month, up 117%. And these foreclosures will be the reason some small banks fail. It's just how the system works. Let me give you a quote from Dave Ramsey, folks. One of the reasons we did not quote a lot of content or create a lot of fresh content last week, we gave you The Uneducated Economist, Derek That ADU Guy, and more. Hopefully you enjoyed those videos because they are amazing. Is because I was at a 3-day event with Think Media, Sean Cannell, and Dave Ramsey, of all people, Dave Ramsey gave the best keynote presentation I have ever seen. Now, if you watch this channel, you're in real estate, you probably have the same discomfort with some of what Dave says. Dave, first off, has been a content creator for 40 plus years. And I will give you two takeaways that I hope you feel. One, stay on message. Dave Ramsey, for all that he is, has done the same message for 40 years. He's not listening to trolls under the bridge. He's not taking a poll. If you don't like what he says, go somewhere else. I think that is so powerful. How many of you have an opinion, a passion, an interest, and then let the trolls dissuade you? You're not taking a poll. Take what you have and go after it. Number two, and the best line I have ever heard. You got to remember, Dave Ramsey, I don't know what he's worth, maybe $1 billion, whatever it is. He said, and again, remember, he's been doing this 40 plus years. He said, 90% of the stuff that we create at Ramsey Solution fails. 90%. People know Dave Ramsey and Ramsey Solution for 10% they got right. How many of you are out there trying to do something and failed and gave up? Again, Dave Ramsey, top 3 podcasts, top 4 content creator. 90% of the stuff he tried failed. He just kept going. He kept doing the work. Folks, there's wisdom in that. And again, I went into that keynote presentation hesitant. I'm glad I had an open mind and listened. And yeah, I guessed what Dave Ramsey's worth. All I know is he's worth a heck of a lot more than me. And he deserved that. So again, that was a pretty interesting presentation. Let's talk about key earnings. We got a lot of earnings coming in. We are in earnings season. I am curious what is going on with the consumer, what is going on with banks. First off, on Monday, we will get Domino's Pizza. Domino's was obviously a big winner during the pandemic. It'll be interesting how they do this quarter, how their yearly comparisons are. Also on Monday, we start getting more and more regional banks. I'm very interested in what the regional banks have to say. Tuesday, we are going to get Coca-Cola. Coca-Cola for me is that indicator of worldwide consumer, right? I have been all over the planet, thankfully for my travels, and Coca-Cola is known nearly everywhere. So Coca-Cola, are they hitting it? Are they missing it? What is going on with the world? We will get Amazon numbers, what's going on with Amazon Cloud, what's going on with Amazon shipping, consumers, and we will get Starbucks. Remember, folks, Starbucks is an indicator for me of China. You can go back and watch the daily financial news when Starbucks reported. I always highlight, I want to know what's going on with the Chinese consumer. Starbucks was the first company that reported China weakness, and it gave us an early warning. So what is Starbucks saying about China? Wednesday, Norwegian Cruise Line. Are we still seeing the consumer spend? That's what I'll get. What does bookings look like? Are they discounting? Norwegian Cruise Line will be important. We also get Etsy. What is going on with Etsy stores and Etsy consumption will be very interesting. Thursday, we will get Apple, Wayfair, and Expedia. Apple, what is going on with the high-end consumer? Expedia, what is going on with travel? I really want to know what's going on with travel, and Expedia will come Thursday. And then Friday, we'll get Hershey. I don't know if I've talked about Hershey before, but heck, I want to know what's going on with Hershey given all these crazy coca prices. Have you guys checked out what happened with coca? Man! So I can't imagine a company more impacted by coca than Hershey, so I will be interested to see what they have there. Folks, did you get the Zuber letter? Yes, we released the Zuber letter last Wednesday, edition number 2. If you haven't gotten it yet, go ahead and sign up at zuberletter.com. This is where we consolidate the weekly content we create into a single topic and put it out to the world. Yesterday or last week, Zuber letter number 2, we talked about why 8% mortgage rates are a good idea, why it can help us heal the market, why 8% cost of capital is good for investors and home buyers who will do the work, who will find the motivated sellers, who will write disrespectful offers. Let's talk about Blackstone. Woo! Blackstone. I have called Blackstone, specifically Jonathan Gray, one of the best real estate investors ever. I have put him on the Mount Rushmore of my investors, but boy, did they miss on this one. Yes, folks, Blackstone had a property at 1740 Broadway. They bought this building. They bought this building in 2014, 10 years ago, for $605 million, 605. They just sold it, 185. 185. That is like a, wow, 60% haircut. 60% haircut. Yes, folks, this is why we are seeing foreclosure crisis in commercial. This is why we will see bank failures on the small side, like Republic First Bank that went out last Friday. Folks, there's a lot going on. Also, we are seeing more and more people talk about stagflation. Thankfully, if you are a member of this channel, you have known that stagflation is a real possibility for quite a while. So folks, I hope you're having an amazing day. We've got 2 people to congratulate. One of the things I love about this channel is this is my way of reaching out and telling you congratulations, giving you a pat on the back. Let's congratulate Len. Len, congratulations on getting your first deal. You wrote disrespectful offers, you followed up, you got a discount on price, you got closing cost credits. Len, congratulations for doing the work. You are amazing. Keep it up. And Aaron, congratulations on getting your next deal. Folks, golden tickets for the first card, black tickets. You can get as many of these black cards as you want. I think there's a couple of people out there that have gotten 10 plus black cards, but you can only ever get 1 golden ticket. Again, Lynn, congratulations. Aaron, congratulations. You guys are amazing. Like, subscribe, comment, become part of the family. Until next time, bye-bye.